On this video, we're going to talk all about FHA versus conventional loans, and we're getting started right now. Hey, how you doing? Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie, and welcome to another video. On this channel, we talk more about mortgages, the home buying process, and some cool things around Port Saint Lucie and the Treasure Coast. So if you're new here, please think about subscribing. Okay, FHA versus conventional loans. Now these two types of mortgages, first-time home buyers, repeat home buyers, they're the two most common types of mortgages. And you might be asking, which one is right for me? Well, I'm going to do a side-by-side comparison, go over different categories on each one. First on FHA, then conventional. And you can see that, sometimes it's a pro, sometimes it's a con. And I could kind of make a joke that the answer to most mortgage questions is always, it depends. And it's so true. It really depends on your situation, your goals, what you're trying to accomplish. This is your first house or you're buying a vacation house. Those things are going to change. So let's go ahead and get a deep dive into FHA versus conventional. Here we go. First, FHA is a little less 3.5% down payment. So it's really not a ton. There's a misconception that you need 20% down. That's definitely not true. FHA is a little as 3.5%. Next is the interest rates. The interest rates on FHA are government insured. Okay, so generally very, very low. Some of the best rates in the market you're going to find are FHA loans because they're subsidized by the government through the funding fee. FICO minimums, credit scores. Actually, the minimum is, technically there's no minimum credit score, but most banks have set it at 500, okay? 500 with 10% down. If you have a 580 or more, you can put 3.5% down. So it's definitely a lot easier on first-time home buyers, building credit, past credit history, so it has a lower minimum FICO. Bad credit wait times. Dovetailing off of credit. If you had a short sale, foreclosure, bankruptcy in the past, FHA has a shorter wait time. Whereas it's 2 years for bankruptcy, 3 years for short sales and foreclosures. Debt to income. Okay, that's the number one thing that'll determine how much house you can buy, whether you qualify or not. So the maximum DTI usually on an FHA loan is like 56%. It's definitely a lot more lenient on debt to income. Those are very good if you need that. If you have something on your income, you only qualify on one, and you need to stretch for a house or what have you, FHA will allow you to buy a little bit more house. Funding fee. That's one of them. Maybe a con. It's a 1.75% funding fee. On a $200,000 purchase price, or a loan rather, it's $3,500. So, and then that generally gets financed on top of your loan. Oftentimes you see in FHA you have a base loan and a gross loan. That's the FHA funding fee being financed in. PMI. On FHA, generally, if you put 3.5% down, that PMI is on there for the life of the loan. Okay, so it's there for 30 years. And that's just a feature that the FHA is right now. Now, if you put down a little bit more money, basically 5% or more, it'll come up after 11 years. Okay, and it's not debt to income base, not debt, but appraised value base. Whereas you can have an extreme appreciation. It's based off a number of years and not based off of the equity in your property. So that's one I'd say negative about FHA. Appraisals. Now FHA this is kind of a misconception. FHA, it's perceived has a more strict appraisal process. Basically it can't be a tear down. It has to be basically intact. If it has obvious holes in the walls, wood rot, FHA appraisers are gonna, they're gonna ding that and make you fix it before closing. Now the appraiser just has to do a head and shoulders inspection of the attic. It's not a full-blown inspection. Like I know some buyers and realtors have heard that FHA is so much harder. As long as the house is in decent condition, you're gonna be fine in an FHA appraisal. FHA does have a loan limit in your county. I know in Saint Lucie County it's $350,750. So you gotta be careful that the house you're buying. I run into that sometimes where the county loan limit might not be able to finance, but that means you have to come out of the pocket with more money if you hit the maximum on your county loan limit. Seller concessions. FHA allows 6% of the sales price. With no loan to value or how much you put down. Requirements. Basically, it's 6% you can get from the seller. Investment properties. Can't buy on FHA. Vacation homes. Can't buy on FHA. It's primary residence only. Condos. Now, I've actually done an FHA condo. There's very few complexes that get approved. because there's a process. A lot of the HOAs don't do it. There is a spot condo process. I saw it rolled out. I honestly, I have never done one. It's just most folks who buy condos just use conventional financing. I just haven't seen it. But condo is a little bit harder to do on FHA. Okay, that was FHA, and let's go and talk about conventional. Same categories. Basically, for down payment, it's really 3% is the minimum. Of course, if you put down 20% or more, there's no private mortgage insurance, but 3% is the minimum. Interest rates. Interest rates are generally higher than, it's very FICO driven, and it kind of dovetails on the next one to minimum FICO of 620. But really, anything that's under 700 is going to have, much greater add-ons for discount points to get a decent interest rate. Just comparatively, the interest rates on conventional are uninsured, and therefore they're a little bit higher. Bad credit wait times. It's longer. So basically on your bankruptcies, it's 4 years versus 2 years FHA. Short foreclosure is 7 years versus 3 years FHA. So really, and then in short sales, deed in lieu, that's 4 years versus 3 years for FHA. So you really got to pinpoint those wait times, and that's going to determine which way we go, FHA conventional. Okay, DTI. DTI is very debt to income sensitive. And really, anything over 45, you got to have compensating factors. 50% is an absolute maximum, but usually when you go over 45, you got to either have some assets, above and beyond what you're putting down, called reserves. Other compensating factors, higher FICO scores, in order to get those approvals. So DTI is capped at 50%. There's no, even 50.01, it's not allowed. Funding fee. There's no funding fee on a conventional loan. So that's definitely a savings. When you're looking side by side, there's no finance funding fee on conventional. PMI. Now, PMI is generally, in some cases, cheaper depending on your FICO score, whereas on FHA, it's set no matter what your FICO score is. It's 0.85%. You put down 3.5%. Whereas on a conventional, it's really based off of your DTI, your FICO score, and what that's what it is. So, of course, the more you put down, the less your PMI will be, but it does fall off, once it goes at 78%. So appraisals, generally, it's not as strict. You can buy homes in not as good of condition. It can't be like a total junker. So it's a misconception. It's like, oh, conventional, it can be a piece of crap house. I'm gonna go conventional. It's really not the case, but it's generally not as strict as FHA. Loan limits, that's one positive. You go by the conforming loan limit, which is now $510,400. So, and that's been increased in the last couple of years. Versus your county loan limit. In some counties around the country, it's like still in like 270s. I know in my county it's 350. So you got to be careful about the loan limits. Seller concessions. Now, less seller concessions, the more you put down, the more seller concessions you have. And if you're putting down 3%, basically it's only 3% of the purchase price versus 6% FHA. But you got to put down 10% or more to hit that 6% mark. And you put down 25% or more, you get up to 9%. So basically, the more you put down, the more you can get back from the seller. So that's kind of how conventional concessions work. Investment properties, you can buy them with conventional financing. Generally, I recommend 25% down. You can put down 20%, but the pricing is much better. Put an extra 5% down, buy investment properties. Vacation homes, you can definitely do it conventional. You can minimum 10% down. Here in Florida, I have a lot of vacation home buyers from all over the country who kind of plant their flag and buy a vacation house here, and with the anticipation of that being their forever house after they retire. Condos, conventional loans have an established condo vetting process that, for spot condos, I've done it several times. You have to go through the HOA, but it's that's what we do. And here in Florida, we have plenty of condos. With conventional financing, you can do condos. So, well, that's the difference in a nutshell between FHA versus conventional. What's right for you, it depends on your goals. We'll definitely sit down and do that. If you're looking to buy or refinance, I'd definitely love to help you and your family on your next home loan. So give me a call, go to DempseyMortgage.com. Thank you so much for watching, and I'll see you on the next one.